right, let's get right to it, everybody. Welcome on a wet Thursday down here in South Florida. What's going on, crew, chat, everybody? Markets are dipping down fast. We were up big. Now we're almost back to flat. Let's get to that in a second. How's everybody doing today? I think we're good. And let me check chat. Let me check volume levels. We got Mitch Ray coming in later today. Waiting to hear from him. So we'll bring him into the conversation because it's been a while. Yep. And looking forward to it. Mitch and I it's been a long while. We haven't even talked, I think. Have we even live streamed this year? I don't think we've even live streamed this year. It's been a while. Anyway, we'll bring him in. Everyone else, you know what to do. Get over here for a 2-week free trial to the greatest software program on the planet, and I'll show you why in a second. Sending your TradingView username to hpc@sr-analyst.com, and the first person to type in HPC30 will win one of those 30-day packages we love to give away. 30-day gold membership, 30-day to the software. Thank you very much. What's up, Kat? What's up, Loot? What's up, Mr. Clown, Lawrence, David? Thank you for that post earlier. Let me know everything's good. Great to see everybody piling in. I see you guys coming in. Yeah, we're 12:30 is the time. I don't know, 12 or 12:30, but let's get to it. I'm going to go with IMM Rook. You already won. I know that. Jeff W. Why don't you contact me over on the Discord? Send me your full name, HPC TradingView username, and we'll get you set up with an email address too. Okay, I'm a Rook. You do the same. Okay, so we give away 2 guys right off the bat. First 2 people. Get over on the Discord, which is right there. So get that. Yeah, please. Only guys, we want to keep it open to people that haven't won previously. We got a lot of new people want to get a shot at the software, and we really should have taken advantage of that when we did the Black Friday special. Regardless, if you need to get set up, hook me up on the Discord. Send me a note on DM me on that Discord link. We'll get it again, guys. Yeah, I give away 1 or 2. Listen, every month we get like 8 or 10 people out of hundreds that want to try it. Maybe even thousands. I don't know. But all about what we're looking at right now, which is the software doing things that defines the essential levels here that we have to follow. And we've kicked it up on the weekly, and I'm going to say the weekly and the monthly time frames, I think going forward for at least the rest of the year. The big patterns we're going to look at today, and we have been looking at for a while, are going to dictate the market for the next 12 to 18 months, I think, at a minimum. And again, we're in this type 1. Here we go with the NASDAQ. Okay, is this target 1? Is that done? Did we reach the objective once and for all? Because we were looking for the thing on the daily, and what happened is it kicked into the weekly, and we knew that about 2 weeks ago, really, that this thing had, we were up here 2 weeks ago, guys. And then last week and week before really are the 2 candles giving us the max pain. NASDAQ, okay, a little better. We were plus 550, 600. A second ago, we were only plus 100. We dropped like 500 points in the last 2 hours. And NASDAQ's moving like bid ask is like 10 points. It's crazy. Right now you're like 17,700, and then you flash up to 17,720. How do you navigate this kind of market? For me, 5 second charts, guys. 5 second charts. And this is what a 5 second chart looks like with harmonic pattern collection software. Okay, all of this, just remarkable action. Here, let me just blow up the last couple of minutes and look at this extreme. Okay, we just dropped, since we started the show here, we're down 200 just in the last 20 minutes. There you go. It's like that. Oh, and look at this. This thing is all over the place. That was check that out. That was a 60.5 second candle. It's absolutely crazy. So careful. Guys, I'm still not doing a heck of a lot. I want to do more, but I'm going to let it settle down. You know, I've taken a couple of shots. I was actually, about an hour ago, I was trying to short this thing and got stopped out because we're getting 100-point checkbacks. It's really tough to capture big moves if you're not going to let this thing, correct 100 points. I mean, if a 100-point trade on NASDAQ, you do that a couple times a day, you're done. These are moving 100 points within a minute. Within a minute. That's where we are. We'll look at the VIX in a second, but let's stay with the 5 second chart for right now. Yes, we'll get to Bitcoin. We'll get to crypto, and we're going to have to really start committing to a direction on crypto. And it's not a nice correction. It's not nice. The patient is ill, as some people like to say. The patient needs medicine. Oh, I can't believe this. Anyway, a 5 second 5-0, guys. No confirmation, but 17,752 was target one. I just want to follow along with some of this. That's a type 1 reaction. Should be going back for the 2 now. There you go. But happening so quickly, you have to have it, I would say, automatic orders. Watch that on the, thank you. Hold on, watch that in the second. 1 second. Let me just, okay, no worries here. Got Mitch lined up in a few more minutes. Let's call that like 1 o'clock. We'll bring Mitch in 10 or 15. So he'll let us know. Anyway, that's what's going on, and I think it's fascinating stuff. What are the triggers? Like, how are we going to navigate? For me, I'm going to stick with the dots, the 5-minute time frames, as our critical intraday signals, especially, with the RTH dots here. That was this morning, a bearish bat pattern. Ever since then, we're still in a type 1. And in this climate, like we've seen in a lot of excited markets, crypto or otherwise, we're not surprised to see even intraday patterns continue to go to target 2s. So, plus, minus 200, 300 points, swinging all over the place. It's absolutely, we're at that point. And so big numbers, guys. Is this the bottom? Is this the bottom? Because this was the target 1 type 1 reaction we've been looking for. I would say you go back to June of last year, we completed that pattern on NASDAQ. And I'll get to the S&P because it's even better on the S&P. 17,838. You need to see a positive close above that exact number. 17,838. We were trading 18.3 this morning, guys. I mean, it was an hour, 2 hours ago. Where were we? There you go. We were 18,300 up there. Still getting a lot of nice patterns. I mean, of course, careful on the bullish ones. Without confirmation, I wouldn't stick it, but The bearish continue. Like there's a beautiful 30-second pattern on the crab with the hop level. There's confirmation, secondary confirmation. And then look at what goes on with these. So I got to highlight this other technique, especially things that are happening as one of the most aggressive trade opportunities intraday is we get these target ones, okay? They're like this off the crab, go to T1 and utilize those for the return move. So we literally just had that 12:30 as we started the show. It was a T1 rejects and fails. How do we know that it fails? There's no confirmation down here. Finally, there's confirmation, but at that point it's failed. We keep printing a lot of these bearish signals, whether they're intraday, they're 5-minute, they're hourly. Again, this is not, I don't think it's over. Okay, I don't think it's over. And let's just glean something from these larger time frames like the hourly. We're right here. Looks like a big capitulation down yesterday. There's a dot on the 4-hour time frame. Do we check that back? And it absolutely sets up mandatory make break levels. Like I would say that yellow dot retest, that is at 17,634. We do not want to see this market under 17,630, guys. Make it easy for you to remember. Under 17,600, then this is a failed capitulation. Keep that in mind. And where does it go? Because how severe is this going to get? Let's kick it over to the SPY really quick. We'll get Mitch here in about 10 or 15 minutes, guys. Here's the SPY, and this is the most amazing chart. Going to be in Harmonic Trader Volume 4 someday, if it's ever written. Guys, there's the SPY. 482.25. That was our target one on the weekly. Happened really quickly. The whole thing, the whole monthly scenario happened in about 5 weeks. From 560 down to 482. Target one has been hit. That's first step in the process. Like I said, it's not over, but that's remarkable harmonic action. The low, guys, was 481.80. 481.80 to 482.25. Now, you could say, how do you trade that? Whatever. Limit order 482.25 in the 24-hour market would be about the only way, because that happened in the overnight session and then bounced back. That's just remarkable. That was up 50 at one point off of that number. But it's only a starting point here. Go to your SPY and take a look. A little better. Yeah, no problem. Hold on. Hold on. So that's where we are. We're going to get Mitch here in about another 15 or 20. He needs a little more time. That's fine. So big opportunities. Okay. Understand that yesterday, if that's going to be a capitulation down and that's it for now, you pretty much have to stop on a dime right here. I'm really impressed because all the metrics are lining up, but we're still going to have to get through this month. And look at what Amplified and HSI are doing. HSI is in the overbought, Amplified trending lower. That's going to be the situation for the rest of the month. So no matter what, it's April 8th. We got at least 3 weeks to get out of this month. And we will absolutely have to deal with these entire levels. We're 507. We could very easily retest that 482 number in a secondary kind of way, if you will. It ain't over. It ain't over. Not yet. And I would love to see some dots. Now, again, my gut is screaming, like, I'm saying, okay, everyone's wants to throw these stocks away. Shouldn't there be bargains out there? Yes, and I think there are bargains. Okay, but at what price? What price exactly? We have a couple of things that continue to fester, namely our weekly HSI. Look, that's not responding yet. So we're going to have to be patient. It looks juicy and a sizable. We're certainly already at those once every 5 year situations. My only question is this a once in a 15-year situation? Like 87? Like, oh, I don't know, like 89 or like 2002 or 2001 or 1990, 2000, that whole area. I don't, the big numbers for something like that to happen are much lower, but it's pretty clear where we are and where we were yesterday has to be it for this weekly type 1, if that's all we're going to get. What we hit yesterday was perfect. The SPY and the NASDAQ and the Dow. I mean, all of these we talked about last week, and they hit. I mean, they hit on the money. Okay, check this out. Another target 1, 37,292, folks. It hit. Yeah, we exceeded it. We overran that by 2%. No biggie. The fact that look, software is printing that, we get a bullish close here today. That's a major situation. And again, would be the end of that reaction, would have to be 37,292. Could be retested. That's 1,000 lower, but this is clearly the range we've got to see everything stabilize. If not, so what if it doesn't? What if this thing just kind of busts on through? So if that doesn't bust on through and we hold, we know we still have plenty of time for sure. Also notice, remember today was the 30-week, 30-day, 30-week thing here of where this is 30 weeks, guys. 30 weeks off of that pattern is there. And we talked about this of going to the week of April 9th to the 15th-ish. Hold on one second. I don't know who's that. Hold on. Okay, man. Yep. I will take care of it after the stream, Jeff. Thank you. But we're 30 days, guys, to the week. There's 30 bars. Bar 29. So that fits perfectly within the model. And we have realized target 1. The only question we have is, do we continue lower? Or is that it? I still say that you give it till Friday, but a lot has transpired just since last week. There's the daily on the diamonds. Okay. My only problem here is there is nothing yet on the daily. We're close, really close, but I want to see a daily as well. I don't want to see this thing not flush and generate daily HSI. We know Amplified's down there, not out of the zone yet. What's up, Aaron? Yeah, these recordings our live streams are recorded every day. You can catch those over on my main page. Guys, hit subscribe, hit the like button if you enjoy what you're watching. If you want to check out all the resources, okay, get over to harmonictrader.com. All here. There you go. Free 2-week trial. Just getting some questions in the chat about the website and everything. Trading the username hpc@sr-analyst.com. Just do it that way. I understand. Right now, I'm having an issue getting Harmonic Pattern Collection live again on the server. It's kind of goofy, but okay. And I'll have that fixed probably in a day or two. But get over to harmonictrader.com for all of your foundational needs. Become a basic member. Just register now, and everything's here on the basic members page. Also, the other platforms. Okay, we deal mostly with TradingView because that's the easiest. But yes, you guys can try all of these. MetaTrader, eSignal, NinjaTrader. I know a lot of people doing the prop trading on things like NinjaTrader, even some on Sierra Chart, and you're welcome to try all of that. Start with that, but get with the software and review all of the resources, okay? And then the videos too. Check that out. But this is big framework stuff. Massive. Nasdaq's rolling over again, guys. Now we're only up 100. Let's go over there really quick. I will jump to Bitcoin. We'll get to Mitch here in about 15 minutes. He'll be in here around 1:15. Get him on for just, mix it up a little bit. Nasdaq futures, you're going to go negative on the day already. Yeah, see, look, this is the big, now we've got the retest. So this is, all right, let's see what's going on here. The first bullish dot in the last 2 weeks, and we're down here, that open bar, 634. We literally just said that 5 minutes ago, and here we almost are. That's where we're going. We'll go retest that bar. But guys, that has to be it. I would even say this prior low, you really can't take out the 405 level. 17.4. At this point, if that is capitulation, these are the levels that have to hold. And I'm not saying they're going to hold. But if you want to think that that's the capitulation low, I don't think it is. It has to hold. Like, it's time's up. What's the problem if it doesn't? And I'm going to just highlight a couple of bigger things. The fact that we're still deeply oversold means that we're going to need more time. I like that you're finally decided to get a bullish reading here where HSI is starting to come up, but we know that takes time. And if it takes time and 17.4 fails, guys, clear levels, harmonic levels, this is the beauty of what we do. Okay, it's either one or the other in most cases. It's either we're going to stick this T1 retest, or we've got something much deeper involved where 15,821 is likely, and it would happen real quick. I think we've got this month to get it all out of the way. I know they've got, tomorrow is going to be a big news day, and I think we just have to get used to this. What are the larger implications and bigger levels? Well, just be aware that this whole thing is a retest of the 2.5-year bull market, and there's your 382 of that pullback. And what does that do? Like, let's just put framework 382, absolute failure, sail on through. So 50 level is like right there. 17.5, 18,000. In fact, 20,000 to 18,000 was just nothing. And now, perfect 618, that swing move is down there like 16-ish. Not, it just not a lot to go on yet. You'd have to stick this zone. I'm more of the opinion that we're gonna know. Like today, if we roll over, yeah, we're now up 80. We're now up 80 on the Nasdaq. Let's say this thing goes negative, guys. There's really nothing underneath here. So 17.4 and then 15.8. I'm gonna just give you two other possibilities. Under 17.4, how low do we go? Well, 18.21 is 15.821 is likely, probably even lower because we get a 1618. And let me highlight this. With this kind of sharpness, volatility, if you will, so the last ditch move up becomes a 1618 down, and like a harmonic impulse wave down. That's 15s. It's not 17s, it's 15, and we're right now at 634. That's what's at stake here, guys. I really want to be clear on levels that we're hitting some initial levels that we talked about off these weekly setups, but no confirmation, which is one of the things we need. Now NASDAQ's, it's up 40. This thing's dropping like a rock. What's Trump talking? Here we go. I mean, come on. Then I think we're 17.6. I think you go straight to 17.4. We're down 200. We started here 28, 30 minutes ago. And we're off 200 and some already. Big numbers, guys. 15.8 is the only other thing I want to consider off of the pattern. And if not 15.8, just so we're in front of this, there is nothing until a full 886 reset. And that's 13.5, 13.6, that kind of a thing. It becomes a shark at 13.6. I want to lay out the possibilities well before this continues to break down and get nasty. But then think about it this way as well. If that's the Biden bull market built on debt and money for all, so then this whole thing is fluff. And that's what's been sticking with me for the last couple of weeks. The possibility that actually the last 2 or 3 years of economic whatever was nothing but fluff. NASDAQ about to go negative here. Now only up 20. All the way down. 886. So I'm going to say it this way. 17.4 violation on the NASDAQ, okay, gets you not only to fail or retest yesterday's lows, probably take them out, and then you're shooting a much larger gap. I'm not fully there yet, but I'm really close. And I'm really close because we're so oversold here with such a deep cut. Like, that's quite a wound that it's going to take a little time for that to heal. So this larger reaction off of this beautiful type 1 on the weekly, that's a problem. It's saying I'm not done yet. And the SPY is the same deal. So what are the SPY opportunities? Like 480 retest, we just talked about that. But for SPY, it's even more a more disparate range of 482. And I would say that this test would not only have to stop here, but you'd have to turn around. You really don't want it at 482, and you barely want to see it at 500. But if we fail 482, forget it, guys. You go all the way down to target 2, 431. That's the problem here. This whole, remember the whole thing with the daily and S&P. I mean, this is how it goes. Like, look at the futures, the daily. We were looking for the target 1 and then said under 5,500, there's real problems. Hold on, go here. Back to this pattern. Yeah, remember? This is kind of nuts, actually. This was our expected move from there to there. And then we got this second wave all the way down. And we would still need another confirmation here. I just, you're deeply oversold on the daily. You need that to give an inflection now. If it decides to stay in there, if we go negative, oh yeah, we're negative on the day now. I mean, we're down 10. We were up 250 at one point. Should be an interesting day. What's the 5-minute look like? All the way back down here at the lows. Yeah, I mean, it's just not stopping. You see the same thing here on the 5-minute. Check out what's going on. Look at the 5-minute RTH bat, regular trading hours. Expected move. Basically double dot there to T1. There's T1 finally. There's a dot. You're looking right there at 51.38. No response. I mean, just straight on through. And this is the other problem. You see it on the 5-minute, okay? What's the trend? Trend is still down. Trend pointing lower. Okay, and even on the 5-minute basis for today, that's dictating the whole directional move. Watch out. I mean, we're getting into these days here. Every day is going to be super tricky and volatile like this. All right, let's get Mitch in here. Really? Yeah, I'm the same. Look, guys, I'm not. I definitely would have preferred to be aggressively short, but coming in here to the year in January, I was basically looking to just chill, let it do the reaction. I was looking to buy after the reaction, and this thing became a lot more. Give me a second. Let me get Mitch here. Bring Mitch Ray in 1 second.
Hello? Um, no, I
Hey,
cannot. Hold on.
can you hear me? Hold on
You're coming through my phone. What the heck?
1
What's going
second.
on?
Let me check.
Wait, no, you're coming. Oh, sorry. Let me change my input. It's coming through like my screen or something. One of my 6 screens. I don't know.
Okay,
Hold on 1 sec.
give it a second, everybody. We're gonna get Mitch in here in a second. Hold on. Give it a second. We're getting Mitch launched in here.
Yeah, weird.
S&P trying to come back. Nasdaq just bounced. How about now? Maybe I'm coming through on your speaker. Let me check. Hold on, everybody. Give it a second. Let Mitch get back in here. While he's trying to get set up. So for today, guys, this big retest. I don't like to see this do this already. Rolling right back down. I want to identify where is the area. Where's the area that we're looking for this thing to stabilize? And it's not ready to do it just yet. Hold on. Let's bring it all in. Good audio. Give Mitch a second here. Yeah. I think he's trying to figure it out. Yeah, text me. I've got you muted, Mitch. So just text me in the chat when you're ready. Anyway, let me get back to, let's go to jump to Bitcoin while Mitch gets set up. Really quick, Bitcoin's back under 80,000. Hold on 1 second. Let me see here. Bitcoin down here, 77K, guys. And yeah, let me hang up with him really quick. And I'm trying to reconnect with Mitch right now. Hold on, give it a second. But let's run through Bitcoin. So Bitcoin is definitely back at target one. Let's go to where's the other? Here's the daily. So we've got the crab pattern down here, and we're retesting this larger zone at 77, 76, 783. Let me see here. Hold on. Hey, Mitch, can you hear me? Hello. Bringing Mitch in. Mitch, let's.
Hello. What is
Hello.
my mic working?
It seems
Hello?
it's there. Can you hear me now?
Yeah. I can hear
Mitch.
you. I
All
don't know
right.
what's going. All right, yeah, we're good now. We're solid if you can hear me.
Right on. Let's get to it. Everybody, give Mitch a
Fantastic.
shout. Let's see. Let me know how the levels are doing. What are the
Yeah, definitely audio check for sure.
you guys let me know. How's everybody doing in the chat? It's been a while. Mitch, have we done a live stream 2025 yet?
Oh, I think maybe one. Yeah, possibly. I think we have. Yeah, I think maybe one.
I forget.
But yeah, it's been
I,
uh over 3 months now. So, but either way, overdue
yeah, I had
and good times to do a stream together, right?
yeah. So I mean, the markets are doing their thing off of those massive patterns. Is the
Yeah.
is the crypto cycle over for now
I
for
mean,
this cycle?
well, all I can tell you is like people want to say cycles and stuff, and why don't we just go by like consecutive higher highs, higher lows? Like if we start seeing evidence of a trend reversal, it's doesn't take much to see that, and then it takes time for that to develop. So we could like get that data, and then when that data presents itself to us, then we can start discussing favorable things for the market. But until like what we're seeing, lower highs, lower lows, lower highs, lower lows, bearish back tests of key levels as resistance, confirmation of distribution, rejecting the 200-day simple moving average. These are all like negative, bearish things, heading towards $73,800, the old all-time high from March of 2024. I mean, that's the target area. It has been that ever since that 92K bearish back test March 7th. Um, until we start showing right structures that are going to increase our probability of a reversal, and until those structures develop at inflection points where we can manage our risk optimally, I don't think there's much to talk about, right? In terms of like us going higher. I mean, look at this market right now. Bitcoin's at its low of the day. If it closed right now, it'd be going for the lowest daily candle close since November 8th. We're talking the gains from the election pump are in jeopardy. Bitcoin is only up 11%, 11.6% off the election catalyst, right? Trump won, and all the altcoins, almost all of them have lost all their gains except the XRP. But XRP structure looks like, oh boy, all those gains about to get knocked out with that massive potential head and shoulder. The head and shoulders is being confirmed with the neckline being broken yesterday / today. Very weak price action. So, I mean, is the cycle over, right? That question. I mean, that's the only way I know how to answer that question,
Yeah,
Like
yeah, we
one trend reversal.
yeah. I mean, monthly charts. We haven't had a monthly bullish candle and since at all this year, actually, with Bitcoin.
Yeah, dude. January 20th, Trump got elected or he got inaugurated, all-time highs, and then signed those executive orders days later and just no positive price action. And then that Wyckoff distribution schematic, we started identifying when in February, uh, people in my group, and I saw it. I'm like, dude, that is so real. It's like literally textbook Wyckoff distribution. And last point supply, there was just nothing. There's just not been any opportunity in crypto outside of, oh, hey man, we're hitting supports. Um, that's it. Assets hitting supports, and now they're just breaking those supports. Like Solana is heading to 90, probably 80. Right now, it is below its 124, 123 threshold. I mean, anything below that is you're just waiting for $80 to $90. Ethereum, you're just waiting for 1420. If it doesn't hold 1420, though, oh mother of God! I mean, this thing's going to what, 1,000, 1,100, 900, $800. I mean, so much lower below 1420. Then Binance Coin, we're just waiting on $500. These are just the next levels. All the supports have been broken. You know, the 1730 support on Ethereum was broken. We're just heading to 1420. Bitcoin below 92K, given enough time, 73.8. Right, we're just waiting. We're in the wait. We're in waiting mode. Unless you wanted to be short, you could have been. There have been some pretty good short setups across the altcoin market. Like Litecoin was beautiful, and Bitcoin Cash and Cardano, I think, are great shorts still. Like they're just a little off their entries. And XRP could technically be a good short. Below $2, below that 190 neckline, especially. Like there's just nothing there until like $1.50. So, and it hit $1.67. It was down like 17% yesterday before this little rally that's already over, right?
Yeah.
And that's bear market price action and behavior. That definitely is. So
These look like they're ready to round trip. I mean, just all of the inconsequential crypto already round tripped, and so it was, I think, by far probably the weakest cycle at this stage. And then you've got all this stuff structuralists. XRP is, just like a curveball, been hanging between 2 and 250. Now you're under 2, which was, that was really it. There's nothing here. And the weekly chart, if the February capitulation, whatever that was a B point, then you're already in the works of putting together a bat pattern. We've seen this so many times before. You shoot down, it's like, 75 cents, 80 cents on
yeah,
XRP. And it can
yeah,
go.
yeah. And I was just saying 155 because there's a few swing highs from history. Like go back, you'll see them, and those are just
Mm-hmm.
candidate areas where there might be some liquidity there, some limit buys. Right, it gets severely oversold after crashing and might bounce there, but that bounce is most likely going to manifest into the lowest high and then roll over again and then retest and then maybe break given enough time down the road. Because this is a process. This is not an event. This is going to take time, lots of time. Unfortunately, people don't want to hear that because we've already been in this downtrend crap for what, three going on 3 months now, almost 3 months.
Yeah,
And the
I'm
Apple alert just went off for fresh lows on Apple.
yeah, fresh loads.
XRP alert going off lows of day on XRP and breaking that 200-day simple moving average right now. Disgusting.
Yeah,
Big one, lows of day.
yeah.
Yikes.
So 73. And I at this point 76. Even though 73 is a big weekly number, under 76 is a problem because that means then the daily's not going to give us, it's not going to stabilize ahead of numbers, and it's basically just saying, hey, I just want to do a deeper retrace. I want more like 60 something handle. 73 I think is, like we saw on the weekly, Nasdaq and S&P hit those 382s. Bitcoin's got a big weekly daily 382 that um, is lower. It's lower, and if that's the mandatory minimum stop, I think it could do more than that. So it's, you're 76.7 at the moment. All time weekly 382, like Mitch said, is 73. Tag it 73, and that would be really similar to what happened last August. I think the key difference is going to be what happens when you hit that number, because in August we hit numbers that were a lot of 382s and we responded immediately. And now we're hitting numbers and we're doing it in, extreme bearish fashion that just continue to drag. And my concern is that, to me, it feels like sentiment wise that people don't worry about throwing things away. People are, this feels like people are throwing stuff away for the first time in probably 15 years, because we haven't had COVID. Maybe the 2022 was a throwaway capitulation move. This I don't know. It's just got a more severe taste, flavor to it, and the numbers are lower. There's no doubt. I can't really point to anything constructive and say, "Hey, we've got a big pattern here." Um,
No,
it's a
nothing. You're in impulse mode. You've been in impulse mode. Right, we're coming off a 130 plus day large bearish reversal W-shaped extension pattern with type 2 returns, confirmation even of the type 2 itself, right? I mean, you're resolving like, hey man, I want to do something. Well, you had your chance. Like you could have gone short of the type 2 return up there, like around what 6,000 or whatever on the S&P,
Yeah.
or 600 on the Spider. You could the Nasdaq had the same type of W shape, and Dow Jones had a bearish shark pattern. I mean, they those were the patterns. So they were bearish reversal patterns, and it was just there was nothing to do unless you wanted to go short or cash up to protect yourself in case this thing actually played out, and it is playing out like crazy. And MicroStrategy alert just went off. It set new lows of day. That thing's probably
Mm,
going to 178.
yeah.
At least 200. I mean, to test that high from late March of last year, but 174, 178, it's like an inflection zone. Or
That
could be
was
a
the top. Right when
blow off
MicroStrategy,
top. Yeah.
when it
Yep.
hit its all-time 1618, which was amazing. It was a
Dude, it's godlike. I mean, how do you can't make that up. It like did it to the dollar. It gapped up, touched it, 540, whatever, and it was done. Blow off top, close in reverse. And we never saw it again. And we probably won't see it again for a long time, to be real.
no, and the 618 off of that, which is reciprocal of the 1618, it's like 200 handle.
Hmm.
So, and I think that's to think about it in that regard of not so much like, okay, what's the story? What's Bitcoin doing? Just measuring and identifying the relationship, which is MicroStrategy just completed an impulsive, and that's what it is, impulsive 1618 extension, and it failed miserably. And so it not only does it need to retrace, but it's probably got to do more than it's clearly doing more than a 382 retrace, but it's like 618 would be a very easy a goal target to reach, and that's like 200. You're still 250, so there's nothing there. I mean, that's we keep running into this situation of looking for things on a retracement. They don't give you confirmation, and they keep sliding, and that's look this definitely a meltdown at the moment. That, like you said, it is a process. The stuff takes time, and you got even if I do XABCD style MW off of just the last move, you can easily put together kind of an XABCD bat. Even an 886 is more like 155, and that's the whole market across the board. You keep trying to project bullish possibilities, like, okay, where could this be an opportunity, and all of it points lower. I mean, all of it's just it's like, hey, okay, structurally you got to come all the way back down, retest obvious support,
I mean,
which
154, 155 for that 886 from that swing low from August. The
it's,
carry trade.
yeah, exactly. So no opportunity, no need to go
There's no
in.
support there, so that's bad. No support at 150, just an 886. So, yeah, well, they are giving us something, and it's beautiful, but it's the sellers that are giving it to us. I mean, now you have like classic distribution structure for sure, right? I mean, like forget the blow off top. Look at the swing high from December 5th, swing high from January 21st, and now the most beautiful swing high was March 25th. That is now the third peak, right? So that is a classic distribution structure. That I mean, that is massive. That has been a distribution structure has been in development for 114 days, and that's the type of structures you're looking at. So you're about to resolve off of this. In the third peak, the one from March 25th, you know
Yeah.
what it was? It was a formal bearish back test. They reconfirmed the validity of the old 2000 all-time high as resistance. And at the same time, you could paint a supply line anchor point from December 5th and January 21st, and that would give you another test of that supply line. So it was
Wow.
confluent with the old all-time high. So it's just perfect. So you're about to probably nuke on MicroStrategy, unfortunately. Like it just and on the RSI as of today, you are falling back into the bearish control zone. You're falling below 40 right now. Yeah, and once you lose that 200-day simple moving average, which is pretty much testing right now, yeah, it's just like dunzo, like lights out.
Brutal. This is
Yep.
brutal. This is what happened in 2000 with all the
Yeah,
.com
I mean, it was
stuff
the
like
same
this.
type of move. 2000, I felt like it was like, man, are we in 1999? I was saying that a couple days on the way up. It felt like 1999, dude.
Yeah,
Like,
it's
that's just crazy.
yeah. I don't. There's all of the narrative in the world's not going to save this thing until it can come back in deeper, retrace. Who knows what this means. I look at it as kind of like a side market to Bitcoin. Obviously, this has not set up. Bitcoin doesn't. Most of the things pointing for Bitcoin are still lower, and you got to let this thing unfold. And you just trying to build an argument. Was yesterday a capitulation low? And you look at S&P was just at new lows two minutes ago. Was down 50. Now it's coming back. It's
Hmm.
now only down, or that was Nasdaq was down 50 and now 25. S&P, down 15 was down 25 a minute ago after being up 250. So that's not really turnaround capitulation material
It's
for
just a
all of
volatile
this.
market, very volatile market. Bots are going crazy. They're in trader mode. They're not in investing mode. The VIX is still extremely elevated. I'd imagine it's rallying. I haven't even looked at it today. Have you looked at the VIX on stream?
No, not yet. It was actually that's perfect segue to do so because we were up at 60,
Yeah. Yeah.
and that's usually look. We get up there, we get to 60. You don't normally stay there too often, so maybe it's a little bit more of this. I got to think we're fairly close. And the COVID was 80, and I'm thinking this is more getting like COVID. There's a lot of readings on different oversold levels where big tech stocks where we're so oversold, we're on par with what happened in COVID. So I mean that's pretty deep. You have to wait for that thing to at least give a 1 day, 3 day something inflection.
Hmm.
Going that deep. And I would say even August was a 65 reading on the VIX index, somewhere between 65 85. We kiss up in there and then can come off for a couple of days. I mean, that's the thing, we're still going up, we still have these bullish candles. It's not, even though it's come
Yeah, it's
off.
still going, man. Yep.
So I gotta wait and see, and then you just bring like some of the readings, like I'm looking at HSI or the AMP RSI. These are still in overbought territory, and that will linger until that can give you an inflection. And that's been the problem across the board. We're looking at all of these to be like, okay, great, they're retracing, they're coming down. But hey, now it's time to turn around, and they don't. So it's just been that way for a month, and now we're getting the bigger result of it. I think it's for the levels. Like if VIX keeps going, we don't get an inflection, we spend another week or so, then it's probably going to have to take the next set of levels. If it's for me, whatever was tested yesterday, they hit pattern targets across the board. Doesn't look good, but S&P 4870 and Nasdaq at 17.8, Dow at 37K. Those are all critical numbers that if we don't respond like tomorrow or Thursday here, then we just continue with this for the rest of the month. I mean, we get a complete washout into April or May, and with the current situation, I don't, Trump's not ending tariffs. He's going hard on this, so this isn't a story that's going to come and go over the course of a few days or a few weeks. This is
Oh no, man. No, this is worth turning stuff. This is something that happens once every generation or multiple generations. So Yeah, we are changing things up a lot, and the market is forward-looking and it is speculative, and it is very unknown where we're going. It's good in the long term for the U.S., but global markets, I mean, global liquidity, people all over the world just don't know what to do with this because it's just right. We're so early in this. I mean, Liberation Day was, you know, last week. It's just beginning, so
Yeah,
yeah, I think yeah, everything's oversold, whatever. But guess what? Things were really oversold March 11th too.
yeah,
For
they just persisting when you expand into that oversold, which is what we've done in the last few weeks. It just adds time to the argument of what is it going to take to end this, and I don't. It's not going to end until we can put in a couple of weeks. So it's look for this thing to keep on going through the end of the month. Um, we're up there. VIX reading above 50 or even trying to hit 60 is a big deal for starters, but we're not. It's just not over in terms of time, even of the things that we would need to see. With the other thing that was the Russell was pretty dramatic, and I'm majorly impressed with what happened here. Where's the is a monthly? Here you go. We have all these patterns. I don't know if you've seen the IWM on a monthly chart, but I've got it here. We have this crazy. So these monthly charts, and I really think that's the big takeaway of what how to treat what's going on currently, what levels to really focus on that we have kicked up into these higher time frames. No more just daily, hey, there's a big daily whatever, and that's going to work. The monthly, weekly or monthly, but a lot of monthly patterns, like the Russell, like the SOX, like the S&P 500, did perfect type 1, type 2s. Now, they don't have confirmation, but what it says to me is respect it. And Russell 183 was target 2. We hit that yesterday, but if we're going to try to find a spot to go bullish, we're going to need a bullish pattern. We're going to have
yeah,
to go through the 1-2 even of a bullish pattern for all of this, with Russell needing to probably go back to the 886 or retest 2022 lows down here, 155, currently 177, and going to need a couple of months, maybe even 3 to 6 months to resolve. I'm showing a weekly or showing a monthly chart here. Some of the indicators that are about to hit oversold, but that's the starting point. You're going to get that test, but not an inflection for a couple more bars, a couple more months. Um, that was one that was on the Russell, and then the Sox was the other one
oh
where,
god, that was the worst, man. That one was like it looked so bearish. It was just like,
yeah,
man, iron climax, and then just so much like 6, 7 months of just attempts from buyers to rival the all-time high, and they could just never do it. 5,200 was that resistance from March of last year, and it's just you can't be bullish on stuff that does that. Because just because of the psychology of buyers and sellers. I mean, less than before. It was like Microsoft, very similar to Microsoft's chart.
yeah, and those are definitely having to work it. And you're the only precedent here in terms of what we're looking at readings wise. You got to go back to 2008 already. You go back to 2008 where you had, depending on your market, yes, it had patterns, um, but the severity of the setup here, pretty remarkable in this monthly structure, being target 2 and 3550 on the SOX. You're currently 3700 is a massive level. Hitting it yesterday, literally, and then bouncing off of that first step, but um, that's also got to be it. You can't def- really delineates it quite well that I'm willing to let that do the 1-2, but okay, is there something larger brewing off of this 1-2 that could take us back, like again, 2022 levels, which is another 30% drop down to like 2400 or less. And with such clear bearish pattern dynamics and type ones and type twos, but the only thing missing are confirmation. But with all of that, to me, I'm gonna have to see conversely big weekly patterns develop before I think that that's structurally done as well. Here's pull back the weekly, and this is something else that it's bothered me just in the back of my mind that we had a lot of bullish readings, bullish patterns at the low in 2022. All the mega tech,
Oh yeah.
some did type ones and type twos, but most were just like a type one. And we have this harmonic pattern phenomenon. I called it like a looping retest where you get a type one reaction that explodes and then it trades like 100 or a couple hundred bars, tops out, and then comes all the way back down eventually to retest. And you have a lot of patterns down there at 2300, for example, on the SOX, or NASDAQ has stuff that's a lot lower where these are quickly becoming a viable option if we don't find any support here and we don't find any bullish action. This is something that could set up where what started in February, March stretches out and we get a larger, like 6, 9 month bear market. And it stretches out like it did in 2022, that then comes back and retests all of these larger patterns. And, again, SOX has been an issue. I think it's been one of the major issues of why tech has failed to run. And the SOX topped out, all the semis topped out with the AI boom, late 23, mid 24. Some were able to hold up, but even like, you look at Nvidia here, it was 90 and change yesterday. There's definitely some weekly stuff down here, but just still, we have this. It looks like it's failed, but it is a bat pattern off of the top. But no, we're not generating any oversold readings yet. I mean, not even close. So you'd normally want to buy Nvidia when it's, I don't know, 30-35% off its all-time highs, but still hasn't triggered yet.
Yeah. I mean, I just, yeah, 10-month downtrend 2022. It was lower highs, lower lows. And then eventually in early January, or early January, finally a higher low got put in. And then a bullish back test of the 2022 low at the same time. So then all of a sudden, inverse head and shoulders that was 150 days large, or 200 days large, excuse me. You had time, you had the structure, you had the ability to manage your risk with a stop loss to protect yourself if the bear market was to continue. That took a lot of time. 200 days, kidding? And we're in impulse mode, right? And what are we in impulse mode off of on Nvidia? Off the rising wedge, the weekly rising wedge pattern. I mean, weekly rising wedge with extreme amounts of bearish divergence on both oscillators. And then, I mean, the luxurious check back, the 140.75 old 2024 all-time high was regarded as resistance. They filled a gap at the same time. And then on the daily, they developed that classic distribution pattern, the three falling peaks. And then hidden bearish divergence developed on that third peak and the gap fill. It was beautiful. I mean, it really was. On the stream, it was just every day we looked at it, it was like, this is what's developed. And now it's cool seeing that resolve so well. 100% measured move of the rising wedge, I think, has been achieved now. And that's all you have. You can't, right? There's consolidation phase, consolidation mode, and then there's impulse mode. It's impossible to have an edge as a swing trader when we're in impulse mode. Everything's in impulse mode right now off of 150-day large structures that are all resolving now, and the TA is being respected beautifully. So it really sucks when we're in this period, because if you didn't take advantage of shorting or cashing up, staring at these bearish patterns, you're sitting long, getting wrecked, or, there's no opportunity for fresh longs outside of gambling, right? You can just go to the casino and just, hey, I don't have an edge. I'm start pulling slot machine lever. I mean, that's what you're doing in these markets, unfortunately. And it sucks, right? Because like what happened today? Oh, look, this is what's going to continue to happen with volatility exceeding like 50, 40 and 50, my God. Um, you're seeing like insane price action, pre-market, after hours, futures, all that, right? I mean, things were up like Amazon was like 5% this
Mm,
morning, pre-market, before the market opened. Things were going nuts. And
yeah.
3 hours later, everything's at the lows of the day. We're talking 5% swings, 6, 7% swings on, you know, multi-billion or trillion-dollar assets, market cap wise. I mean, that is not a good environment for a swing trader. It's yeah, it's but hey, day traders, it's paradise. But good luck, man, with all the the bots, man, the algos you're competing against. It's not going to be easy, and yeah, I mean, good luck getting a 3-to-1 reward to risk for as a day trader. You got to do 2-to-1, I think. So
I think things
not
are
as
moving.
easy.
Yeah, they're moving so much that I've been saying that for a while. That it's probably just a day trading environment. I tried to buy a few things a couple weeks ago, got totally burned. Didn't go huge, and I've been sitting on the sides. Of course, I'm frustrated I didn't take the short side of it, but again, that wasn't my plan. My plan this year was just to chill early in the year and let this thing do the retrace, and it's just completely fallen apart. I'm trying to climb back on board of like, all right, if it's not going to happen now, then and I want to get back into this, then what are the plays? And yeah, I think day trading is probably about it. Like Amazon, is having great movement all over the place, a nice little bat right now. But you're getting these 10-point moves that aren't sustainable. You go up 10 or 20, and then you roll back right back down. I'm showing a 5 minute, and Amazon's been moving to the point where, like, hey, two back-to-back bearish patterns, and they're moving in 10-point ranges in a session. That's great trades, and I think my expectation of looking for a swing opportunity was crushed about 2 weeks ago. So I'm still sitting on the sides. Don't feel like I've done much the whole year, and looking at crypto, which is something I've since January has been I've been super cautionary on that, and really got in. At least I got in front of that Bitcoin retracement, but now, like with everything having come together like this, okay, day trade's one thing. Looking for longer term opportunities, not yet. I mean, I need to see more action. I need to see like weeks more action. And I want to be contrarian. Something like Broadcom yesterday when that was down at 140. I mean, I couldn't believe it. I've been looking at that since, I don't know, 220, 210. There's Broadcom is down here with has a kind of an overrun bat pattern, but found perfect support at 143. It's time and time again these type of stocks, they get this oversold that quickly. I instinctively I want to look to buy, but you're definitely, yeah, it's a increased level of gambling here where you're gonna have to take drawdown. Some of the stuff I'm drawing down, like I'm in Amazon. I've been like hitting 100 shares, hit 100 shares at 200, then at 190, then at 180, kind of a thing. As trying to build a long-term position, I wanted to get to like 1,000 of that, thinking that 190, 200 is an easy return move back to 230 or something, and that's absolutely out of the realm of possibility for now. And I'm thinking, all right, maybe if it gets back to 190 or 195, I'll just kind of bail out and reassess. So I'm trying to keep open. I do think it's a difficult, as this has developed, it's become more challenging, and I'll wait for the clear 2 3 day confirmation here. I think Broadcom is one of them. Generally between 143, 167, I'd want to be thinking that's a long term opportunity. Give me a dot, and that would even be that's going to take like one more day, at least one more day of some green action. Uh, Whereas like Amazon, my thought on Amazon is like, hey, this might run all the way to 150 before it truly finds a bottom. There's nothing else down there. There's a shark at 150 from last August. It looks like it's going to retest that, and then beyond that, if like this weekly stuff doesn't hold up or we don't get oversold quickly on a weekly basis, there's bigger targets lower. So it busted structure like 2 weeks ago with that action. We busted a lot of structure. We're seeing it. Nasdaq's trying to come back now. It's up 100 after being negative 50. S&P is up a scratch, up 20. Was down 20, but this is all great day trading, and that's beyond that. I don't. I'm not. I want to get back in here, be more active, but I'll also be patient and let things kind of settle out a little bit because realistically, like if Nasdaq's moving 20, 50 points in a 30-second bar, that's you get caught in one of those. I mean, I've been caught. You get into a position and it overruns your target level, and then you're down 500 in seconds. I mean, it just that kind of drawdown it just becomes more challenging. So I'm gonna stick with lining up a bunch of these. The other one that I don't know if you saw, Meta has bullish patterns on the daily, and I think that's a start. There's a big bat pattern. Hop level is 521. It doesn't look good. I mean, it's not ideal in any stretch of the imagination, but we have patterns. They are responding off the levels nominally. I think Meta's like, all right, it's either 500 or total meltdown because you're based on a lot of the things that I've been looking at. You're scratching these long-term levels in a way where if you don't hold there, then you're gonna do a lot more damage. And I don't, I'd be surprised because it's been so long, and maybe that's the problem is that it's been, we haven't had a washout bear market. 2020 really wasn't a washout. I mean, I'm talking like across the board. Most devastating bear markets will retrace 40% of the all-time price. We've just seen that time and time again. 40, you could say 38's number, but 40%, big number to consider. And that would
Hmm.
be that would be, S&P 500 back down at like 3,500. So, just to wash it out. It's in terms of time, just think about it. A 2-year retracement would get you there. Retracing the last 2 years, and that's not a lot. So
Yeah, so far from the bear market of 2022's nadir, right? That was October 2022. That was around, I mean, that was literally the Vegas meetup stream we did. How
yeah,
crazy is that? We are we pretty much, I mean, yesterday hit at the lows, the very lows, about a 50% retrace. It's hard to believe that we've retraced 50% from the all-time high that fast in just a matter of, what was it, 50 days, 53 days. So, 50% retrace, that's Dow's theory, right? An asset will retrace 50% before rallying. But the issue is, okay, day trader, cool story, all that. But any move, it just means like any moves we get higher are almost certainly going to be dead cat bounces, lower highs, gap fills. We're going to put in the lowest high of the new established trend, and we're going to roll over and retest the lows later. That's all that means. So it's just like it's really hard to be optimistic right now because you just know moves down like this is like institutional selling. I mean, you got economic and financial tectonic plates shifting, and it happens like once in a lifetime, if that. I mean, that's what we're dealing with. So really, I mean, some sectors are hit way harder than others. Like, good God, like American retail just devastated, man. Things like Nike and Under Armour,
yeah,
uh, those things hitting like 15-year lows, like casinos and entertainment, leisure, airline companies trading like S coins the past 50 days. Like, they have lost so much value so fast. Yeah, any rally you get off that, it's not gonna rival that high we had. It's gonna rally. Market participants are gonna realize, holy crap, there are so much less of us than that peak, and eventually the buyers that are the ones that were buying, they're gonna relent, and the sellers are gonna reassume control, and we're gonna go lower. That's the issue with this 50 plus days we've had now. It's kind of the impulse that has reversed things. Uh, Unfortunate.
Yeah, I just sent you a chart. Take a look. This is 2008. We had a pattern, different pattern, but it was the same setup of a monthly bearish pattern with confirmation
Hmm.
and taking it to target 1 in 2008, and that was the midpoint when we got to target 1, where the top and all the confirmation was 152, 153. Target 1 was 160.16. The low was 66, 67. Call it 67. I won't even go in there, get into that conversation. But that's what we're looking at the moment here. That we don't get the follow through literally this week, and you see this thing start to lose traction into next week. Then we shoot the gap where target 2 becomes real pretty quickly, and then it takes many more bars, many more months to turn that around. I mean, we can do most of the damage now, in my opinion, and then still have several months where it would have to bottom out, wash out, and it seems to be what's taking shape here, because a lot of the similar type of dynamics were going on in 2008, where we were oversold, didn't want to come out of that oversold, and then spent 6 months, 8 months until the thing really was able to turn around. So that's really putting kind of the kibosh on the whole year. Like, at least going out across the summer, that we can't get up there. Hold on, there you go. We can't turn this thing around as a monthly chart. Then target 2, like S&P target 2, 431, and then with lower possibilities there. I mean, 431 on for target 2 off of the massive pattern. That's the only thing. That's the big thing that we've had. We didn't have a bearish pattern pre-COVID, but we had a bearish pattern pre-2025 that took shape pretty quickly. And then now what needs to happen is this thing come in and reverse. Yeah, what's that? Let me see this. Exactly. So here's Mitch's. I put this up. Mitch has got this chart. Nice chart. Long-term trend line. There's
You got
S.
two of them. Yeah.
There's S&P, and yeah, we can. Is that? It's either exactly that accelerated trend line or the primary
The
trend line
money printer
retest.
trend line, you want to call it, right? The money printer. Like that's like acceleration of quote unquote demand. No, acceleration of money printing. Because that like goes back to the COVID crash, anchor point one, anchor point two is that 2022 nadir. And now we're like approaching it. If we haven't already hit it, we might have already hit it. So if that doesn't hold, yeah, then you're probably going to definitely going to test that swing high, like from 2021 at like 478. If that doesn't hold, yeah, you're done. You're 357 and a date with the 2009 demand line with so many touches and even was respected in 2020, which was insane. So yeah, that's the reversion to the mean, which is no one wants to hear it like 372 or 350. It's a moving target because it's demand line. But look at all of that on that chart. Look at the RSI though. That's
Yeah,
what's like so trippy. I mean, triple bearish divergence on the monthly on an index fund? No way. How does that resolve? I mean, you're hitting the lowest relative strength reading and you just fell below 50 this month on the spider. Lowest RSI reading on the spider since December 1st of 2022. So it's been a long time since our monthly RSI has been this week. We're showing on this month the first level of negative momentum since June of 2023.
yeah,
That's just crazy. These are real things happening on the monthly on a really significant time scale.
and that's a
There was a
huge
bearish
reading
engulfing
though.
candle.
For the
Yeah.
first bar, that first bar for MACD is that
Hmm.
that's a massive bearish Flip.
Yeah, you know that's going to get some more histogram wicks behind it or in front of it, I guess you could say.
Yeah.
People are saying
I
your mic's quiet compared to my mic. I'm trying to get away from my mic so
I
it
don't
kind
know.
of
Yeah, maybe let me
normalizes.
check mine. Hold on, let me see something else.
You're coming in very clear on my side,
Hold
but I
on.
don't know.
Let me try this. I don't think that's, you guys let me know if that's any better. Maybe it is a little bit low. Hold on. Let me bring that. For some reason it is. Let me try one thing, guys. I'm going to boost my levels. But yeah, the indicators lining up to where we're not anywhere close. That's the problem. I think for me, when the daily fell apart, the issue was that there was a lot of downside. Like the possibilities
Hmm.
were, they were a lot lower. There was really no in between here, and it's still no in between. I'm just, I'm trying to think here. Should we be thinking about something much lower? And of like full 886 style, we go back to 2022 886 is because I think the target twos on all those patterns definitely likely. Hold on, let me check one thing. Ah, there we go. I see what's going on. Let's do it that way. I think I'm going
Yeah,
to
you're
be
louder
a lot
for
better.
sure.
There you go.
Yeah, definitely are.
Sweet. I had a little filter on. And that's a great way to frame it out because it's either going to be this accelerated retest or it's going to be that larger primary retest. And just the way it feels with the selling and kind of you have a real market dilemma going on that it's not a surprise. And I don't think it's going to take long to figure out whether it's we bypass all this 4,000 stuff and we find ourselves like down here at these target twos. And like we saw on the daily, um, with the SPY down there with target two of 431, that makes what we just hit yesterday kind of a first step in the process. And it's surprising. You try to do the math on this, but it points to things I'd say a lot lower of like even like the big ones like Apple is on the monthly looks the breakdown candle for the month is absolute most devastating candle we've seen in years on the monthly. You haven't had that kind of a wipeout. Um, Got to go back. I mean, even the COVID stuff, and this is where for me already you're seeing this. You're seeing a lot of this stuff break down in a stronger fashion than COVID did, and so Apple still has probably another 10 or 15 points before it officially gets oversold. And the other aspect of it is there's no bullish patterns forming yet. I don't.
No, no, nope. You're just coming off of a lot of bearish reversal patterns that took 100 plus days to develop. That's it. My God, man, like just there were some good opportunities. Like Pfizer was one of the best opportunities for a short I had seen before all this started. Oh my God, dude. Just price action correlation, trend analysis, a bearish 50 pattern. It was legit gorgeous. What was it? Yeah, bearish 50. Yeah, I think I had it as a 50. Yeah, let me
Well,
show you the Spicer
Pfizer. Oh,
50. Yeah, dude, it's
but
beautiful. Just look. It was like,
yeah.
yeah, risk management was optimum. I'm gonna send it to you real quick.
Well, you have things here where Pfizer's. When you look at what are the pattern possibilities, here's Pfizer. I mean, we've been kind of not really constructive on Pfizer for since the COVID peak, but the fact that this thing, looking at the prior patterns, are basically shark at 13. You're at 21, not stopping. Here, let me bring that. Let me see what you got. Oh, yeah. Hold on, let me bring that back over. Hold on, guys. That's Pfizer. Where's the setup? If I wanted to get bullish, where's the pattern? There's nothing there. And we're gonna have to just stick without it. Let me see what you got. Oh yeah, here's what Mitch has on that Pfizer. And I think you could say this about a lot of these larger type of setups where if there's nothing, there's nothing, and it's in liquidation mode. I mean, that's certainly one of many where that's not an uptrend. And
No, God, no.
you have others. I'll show you this. So there's just the long-term patterns are popping on all kinds of stocks, even like Coca-Cola here on the weekly. It's a type 2 that just
Oh yeah,
completed.
it is. It is. Yep. Looking at that yesterday, it was beautiful bearish bat or bearish. Yeah, bearish shark. Excuse me. Type to return, and yeah, yesterday was just a little reaction at the 200-day moving average, and yeah, man. I mean,
That's a big
spectacular.
deal.
Oh, and then the bearish divergence developed on the second high, like immediately on both oscillators. That's beautiful. Holy crap!
Yeah,
Gotta love
and
that.
I keep seeing stuff like this. There's just a lot of things like this that are you're printing a lot of perfect type 2 patterns with targets that are a lot lower. Coke 68. If it is a type 2 and that's what it is, target 2 is not until $60. And putting a lot of these together one by one, it's all right. I'm not, it's not a long opportunity. Not
Oh, it's
yet.
like cash up or short. I mean, that's it.
Yeah, it's cash up
Cash or short.
or short. Yeah. And I think it's going to be, mostly cash for a while until this stuff plays out, and it could be months. The other one was the other one that I did like, and I was waiting on it forever, is Valero. It had a type 2,
God, it was so bad. Yeah.
and it came down on the retest, and it's just another situation here looking for a retest between like 110, 120, and it just slammed through. And we talked about this last session, but there you go. And that's been the kind of the what's been happening to long positions that set up for perfect type 2s if they are there. So you either got massive patterns that are setting up bearish that have topped out now, and then long positions that look like this that they go and they fail right on through. I'll give you the other one, which is Dell Computer.
Oh, Southern Company looks identical in a way to Coke, by the way. So you can
Oh
look at that
yeah,
one after this.
we'll do.
Yeah, I'll send it to you too.
All right, cool. Um, Perfect type 2 on the bat on Dell 6650 hop level. I was thinking let's look at 91, and minimal reaction rolls over, nothing. And the weekly was just like them all. Okay, the weekly not doing anything but continuing to trend lower. And look, Amplified's still down at this point with Dell. As a company that I would love to buy on a discount. It's now 60% off the all-time high. Where is the like we're gonna just trace out M's and W's, which is a really easy way to kind of guesstimate where we should be looking. On the weekly, it's just like this. If I'm looking at Dell, then I've got an XAB. Notice B's almost perfectly at a 618. C, D at a 786. It's like $60 or lower if I can
Dude, you're
trace that
getting a
out.
Dell.
Dude, you're getting a Dell, but not, this was just amazing. That was absolutely amazing.
Oh
But
yeah, that thing's 886 in I mean, you just think high probability. It already broke the bad action magna move. High probability.
yeah, there's Southern. Oh my goodness, there's Southern.
All right, look at that. It's so much downside potential. Like that's the reversal structure to give you just an 88% retrace from that September 2023 low to the highest point. You go to $71, right? Off that. Probably like if it's gonna be like a just complete reversal. I mean 80 sure, because it's support resistance, but like just talking about if it's reversing this trend. 70 seems like
So, and
on deck.
this kind of stuff looks like asset liquidation environment, and all of that.
Yeah.
Crude oil breaking down. Crude has an interesting, is really elongated pattern here, a bat pattern. I'll flip it over to you, but if we're just going to read the levels, and clearly the type 2 has failed, the next stop on that is $52. And so all of this is it's really continues to kind of build to where this is asset liquidation style retracement correction material than anything else. And crude really needs to be down to like 52 now after doing nothing. That's a failed pattern. Again, where would a capitulation event be? It's down here at the hop, or even like, we get back to this thing here that is really interesting on crude oil. And again, another thing to get in front of, and we have to go back to massive long-term history of not only the last 2 or 5 years, but let's go 20, that we have big monthly patterns with levels for crude oil. It's a big bat pattern on the monthly. NYMEX crude 42.80. We're 59 at the moment. But if we're going to get this liquidation move, which it looks like NASDAQ just went negative again, S&P negative again
Oh
on the
yeah.
day, then the levels are a lot lower. They're a lot lower. I mean, crude oil, let's say, we have this bigger event and things go to shit, and it's a liquidation, risk off everything event. You probably need to see these big patterns be satisfied. And again, with crude oil having done nothing for the last many years, and remember, XLE had massive bearish, I mean, massive patterns that spent two
Dude,
years up here.
yeah. Size of a solar system, man. Like you kidding me? Like any like 19 or 91 and $93 on XLE, that old high from 2008.
Yeah.
Like they couldn't break it. They kept testing and failing, and it was like, man, I'm telling you, up against that level, given enough time, this is not gonna end well. Like they keep failing to break it. You're showing lower highs. Yeah, it's like a huge like kind of rising wedge pattern that's now resolved. It's like here, I'll send it to you so you can
Yeah,
kind of see.
definitely. Yeah, I'll post it.
It's I mean, but it's like the largest rising wedge probably on the entire freaking market, man. It's just massive.
Yeah,
Probably like extremely discernible on the monthly of a rising wedge.
and XLE we had a couple patterns up there at 99. You go back, we're talking 10-year. And this is the looping phenomenon I've referred to in a few others, where you got a big pattern, a couple of patterns, and then they do this long extended move, like I said, 100, 300 bars, and then you come all the way back and you retest both of those zones. And you did. So 99, 97, but you didn't do anything there for 3 years or more.
Look at
Exact.
that, dude.
Yeah.
Look how crazy that
There's
is. It's
Mitch's
like
chart.
always maximum downside potential if you're at 91, $93. That's
Yeah.
just the downside now is like, okay, minimum 54 on XLE, but if things get nasty, 39.78 to $40. And then if you do that, then all of a sudden you're making an 88% retrace from the COVID crash low to the highest high we saw in May of last year.
Yep.
X marks the spot, 32.23, 886. And then a 786 is $40.
And XLE has actually, we had massive patterns at the 2020 low, but that was 31. And that's the only thing that you have. I would say, even a minimum, if this is a type 2, which it is, the target 2s off of the patterns that it did kind of round trip here are more like 66, not 77. So all of this still kind of building for lower retrace, lower retest of, or
Way deeper.
flat out correct. I mean, full correction mode of that cycle's over. The 2020 to 2024 cycle
Yeah,
done.
it's done.
completely done. And so crude
Yeah,
oil,
anything below 80 is nothing, dude. Below 80 is like maybe 60, on XLE, maybe.
crude oil gets decimated. Crude oil is like a 42 target. It's not $60. It's not $55. It's like it's well under 50, and then that drags the rest of it down.
On the
And
monthly, there's nothing till like 40, 38, 40. That's it. There's nothing left. If you look at the monthly chart, okay, maybe, yeah. There's one time in February 2007 that 50 was a support, but other than that, the harder, stronger, more well-established supports are like 40 on CL.
yeah, no doubt. And that's so building the arguments. Okay, what are the patterns here? What are all these long term ranges have done, and where can they possibly go? All of it still points lower, and if anything, this month has set it off. It's not like it's the end. It's actually the beginning of moving into a new monthly phase. On
Technically, last month set it off. I mean, we had a bearish engulfing candle confirmed on the spider. We had
yeah,
tweezer top reversal confirmed on the 3 month on the Dow Jones Industrial Average. I mean, you had these very real pattern. I mean, I was the day the month closed, we covered this on stream. I mean, these Japanese candlestick reversals. It's like imagine ignoring a Dow Jones quarterly tweezer top, and then it already had a confirmed and valid monthly tweezer top reversal. Just insult to injury. So I mean, they were there. These reversal patterns were very real on these index funds. So last month set it off, and this month we're catching the follow through to give confirmation to last month's candle.
yeah, yeah. I'm looking at a couple of the big ones. The integrated Chevron, nothing till lower.
Man, that thing dumb.
Yeah,
Good God, yeah. Like, look at that, man. Going for, we got 22 days, but if it closed right now or lower, it'd be the lowest monthly candle close since January 2022. So we're talking over 3 year lows on CVX, one of your largest oil producers in the world. I mean, that's that, and there's so much distribution. I mean, there's nothing. You went 130, right? Maybe test that level.
yeah.
And
127.
that's just check. That's just a check point. I mean, probably going like till 111, $100, in time. I mean, think about a distribution structure this large. I mean, we're talking a 1,000 day large distribution structure. Good
2021,
luck, man.
22. Yeah, even just that one. It's
That
impressive.
is gross. Yeah, and you got your freaking crab pattern right there. It looks like
Yeah.
wow.
And nothing, not oversold. Not, I mean, that's part of what is really interesting going on here is that there's, this long drawn out distribution thing is suggesting bigger things to come, and you get a follow through next month on this. You're right. I mean, you're 139, but there's nothing. I mean, 127's a scratch. It's more like this thing goes to $100. Then maybe you could start looking at it. But price wise, the last thing to happen here is just price to follow through what all the other indicators are pointing to. Hold on one second.
You want to get kind of scared a little bit?
What's
Why don't
that?
you go take a look at Home Depot on the monthly
Oh, geez.
or Lowe's, whichever. Take your pick.
Home Depot.
Yeah,
Yeah.
HD, man. That's just like wow.
What? Right? It looks like a bat. Should be a weekly bat, monthly bat up there.
Yeah, kind of hopped for sure, right?
Right at, well, monthly 886. Oh, I see. It kind of poked through a
Yeah, it
smidge.
did the fake out thing. It was like
Wow.
listen, do some buying, let's stop loss hunt people shorting above 420, and then the next month bearish engulfing candle was confirmed back below the level. And that was literally December. And what did they do in January? A formal bearish back test. They reconfirmed the up thrust. They reconfirmed 416, 420 as resistance, and they did it one more time in February. That's a bearish price action correlation to 420, 416. And look at this fall through we're getting. I mean, it's just maybe the beginning of this thing. But my God, the downside potential on stuff like this, the way it's just gone on, and now up here, a slightly higher high potential double top. with bearish divergence that is just so real on the oscillators. It's like fear porn almost, right? Chart fear porn. Sadly, I'm just
Yeah, it's definitely at the we're over the edge here. Lowe's was a type 2. It was a perfect type 2. Had the reaction a year ago down for the 1 and then you go for the 2.
oh my god, dude, you
So,
don't even go to the 3 month on this thing. Oh my god, it's over. Like three black crows, kind of certain bearish divergence on both oscillators. Oh my god, it's so cooked. I just don't
yeah.
even like. How do you even want to? I'm an investor, bro. If you know technicals, how can you be an investor of something that looks like this? Oh,
Yeah, quarterly there is still, I mean, everything you got right now on the edge there. Under 200 for Lowe's is a problem. And that's where you're at. You're at this edge here where things are going to take a larger turn if you don't do something. I mean, literally do something in the next 2 weeks. Like you find yourself on an ugly close for April. No reason for this thing to stop just yet. Um, that, I mean, and then where does it go on sale? Because it, at, the real bargain, technical bargain, just go back to the multi-year lows. I mean, multi-year 886 reset lows, four lows.
would you just do the COVID crash anchor point for a swing low?
Exactly. That's it.
That's like 175. Good God, man. Like,
And
what would we
that's
be?
and it's a great kind of thought here that if we're gonna do this, and this is lows, but it could be everything. But
Yeah, a
what
lot
is
like this.
it? It's the 886 retracement of the COVID funny money. So
Yep.
COVID funny money got you from there, one something, 120, 130, up to 280, and then come on back and do an 886 reset. Like give
Yeah.
back all the money that COVID delivered, and then the COVID fluff. It's the COVID fluff retracement where, in hindsight, okay, thinking about it that way, that was all funny money that had to come back in anyway, so it's not going to be retained out in the economy. That's all it could do. And not like it did a massive multi-year move with all the money that was pumped into the economy. So if that's fluff, and then the 886 is a reset. It's like a crypto analogy here, where the crypto, does a if it's a crypto style fluff move, then doing an 886 reset of that range is no big technical deal. And that's like 180. It's not 215, 214 on all of that.
Yeah. Um, there's a
What
lot of this going on these markets. I mean, good God, just scanning through.
little top, getting a little.
it- If this starts accelerating downward, I mean, like if we start getting, really bad, we were thinking, hey, Sunday evening, the market environment was the most conducive for a circuit breaker in 5 years for sure, and it's not even close. And it didn't happen. But like, what happens if it does start happening? Circuit breakers. You're probably gonna get, you know, pullback on it. I think there will be indiscriminate selling of virtually everything that exists on a chart, kind of like what we saw in 2020. If we're getting 7% drawdowns in the S&P 500 or the Nasdaq or whatever, yeah, I mean, it like the thing is, right? We're trying to apply a framework to give ourselves an edge. You certainly have no edge on gold. Why? Because we're in an impulse, and a godlike impulse for that matter. You're just in la la land, right? I mean, you hit anything below 3K now is a psychological level. So um, there's no value, right? You're paying all-time high premium to own gold. You certainly have no edge. There's nothing that's helping your chances of it going higher. Your upside's technically very nebulous and limited due to the fact that it just went on a godlike run. I mean, from September 2023 to now, 500 days, 520 days, up 72%. Um, so, like, it's just, it's not our job to know when this thing's going to top out or not. It's just our job to understand, well, there's nothing a swing trader or position trader could ever do in this situation to help themselves. So yeah, hey, I own some gold, some physical gold. It's just sitting here. It's illiquid. I'd have to do a lot of crap to go sell it. I don't really give a crap, right? I mean, like most people shouldn't care about what's going on the chart with it, But sure, it could keep going because we're in a very weird macro environment, life changing, or lifetime shift in economic policies and all that. Maybe gold keeps going because of that. It would be just fundamental, weird stuff. But yeah, that's just who knows, right?
Yeah, I've been looking for like 3,300. We hit 32
Sure.
and and I think we're close. I think we're close to where we can at least pause it for now. Monthly, at least, or quarterly on my software, I'm getting some oversold signals. Got lower HSI reading on this versus 6 years ago. Potential divergence. We're not out of extremes yet, but if we're going to do, like, if we're in an asset liquidation phase here, which I think we are, I think
Hmm.
everything's going to get repriced lower.
Well, what we could do is just look at '08, right? Well, what happened, like what happened to equities and the gold? I mean, everything nuked eventually, but then what happened to silver and gold? They began their recovery process a few months, like 2, 3 months before equities did. They bottomed and started rallying before equities. That's all I remember
Yeah,
about.
this is '08 right now.
But yeah, but then they topped out in 2012 and went into this death market while equities continued to rally for the next decade. So
Yeah, I mean, I think the '08 thing though was really the start of kind of the wake up because it was only 1,000. I mean, it's a big psychological level on gold, and it had a short retracement, but it definitely took on a new tone after that little bump. I think the gold stuff was really it really caught fire early 2000s when some of the inflationary stuff and the debt stuff started peaking up with Iraq War. Yeah, you didn't get the real acceleration until like uh, you know the 2019, and that's the incredible thing. 2019, halfway through, you're still 1,300 on gold. So you think
mhm.
about that in the last 6 years, that's up 200 plus, 230%, something like that. So, and we're talking really like 6 years of that accelerated action. And then the last 2 years with the obvious, with all of that spending and stuff that was committed, that got it from, which wasn't much different than, at the low 15, 1600 to do a double. That's a hell of a move. I think we're almost there for watching gold, trying to put in monthly, weekly. You got a weekly dot here. You're overextended on even on gold, which is if that's a safe haven, sure, but at what price? Because from
Yeah,
2,000 to
and that's the
3,000.
thing. Yeah. Yeah, dude, look, I mean, if you look at the quarterly chart on gold, like you can't even tell really that 2008, the global financial crisis even happened. I
Yeah,
mean, it almost looked like, oh, that's just stalling out before it went higher. I mean,
yeah,
so what does that mean? That's like, oh, gold could go lower. It could go to like 2,700, 2,500 with the world collapsing, equities market collapsing, like rush to cash, situation, pivot, and then rally higher, hit 3,300 in 4, 5, 6 months, like 8 months. So yeah, very good uptrend, that's for sure. And you're probably not revisiting 2000 anytime soon, but you might pull back some before rallying higher, But again, there's no edge, all time high premium. There's no value. It's just gambling. Yeah, you're just whack a mole. I don't know when's it going to top out in the short term. Who knows, right?
yeah. I mean, I guess I had Bloomberg on for the first time in months. I was just watching that yesterday morning or something, and one of the young whippersnappers was on there saying, "Yeah, I think gold got cleared out, and this is a good entry point." And I was like, "All right, if those guys are saying that, then it's probably time to dump because this is
Yeah.
overextended. We are getting overbought signals. I'm happy to say, I was looking for 3,300. What was that high there? The high was 3,201. I'm pretty good with it. I think this around this 3,000 mark. Um, that's definitely enough for now. We need to come in, but I'm just thinking, looking at this as a signal for liquidation. Where I agree with you, you could go back to 2,500 and easily still be in a long-term bull market. But for now, I'm going to watch this 3,100. We have some stuff on a 4-hour chart. A real liquidation for gold is under 29.30. Like you break under 29, then you're going to go do that deeper retrace, and it's
Yeah, 2790.
yeah, yeah, exactly. Yeah, and it's kind of like crude oil, where crude oil hasn't done anything for 3-4 years, gone sideways, and now rolling
Oh,
over.
it's been putting in consecutive lower highs. There has been evidence of distribution on CL and US oil. Like
Yeah,
it's descending triangle behavior
but
for
not
years.
acceleration until recently.
Oh no. Oh no. Yeah, that was just absorbing remaining demand at demand lines. And now demand has been absorbed, no more demand, now the markdown. And now you're breaking other supports, like what was it, 60 or whatever. You're below that key level on oil. It's just yeah, so 50, you're going way lower.
Yeah, and those are
History tells.
those are the things to be looking for. If gold, like crude oil, I think it's already on its way. And you get down to the 5250 level. That's one sign. Gold breaking down under 2,900. That's that's what I'm looking for if we get this next wave lower. And let me look as we Nasdaq going negative again, guys. This is not good. I mean, let me just circle back here and I'll kind of wrap some things up because I'm got to get on with maybe hitting a few things between now and 4 o'clock. It's 2:30. Here we are on a 4-hour chart. We printed a bearish HSI overbought, meaning on that reaction from yesterday to now. It's now overbought again, looking like we got to come back down, and we're down 10.5 minus on the Q on Nasdaq, and yeah, even the hourly here, it's insane range. We were 18,357. Now we're 17,540. Like
Yeah.
800 off the intraday high this morning.
Yep,
Um,
Nasdaq down like 5% off its highs, 4.76% off its highs.
yeah,
And then some of the big names like Amazon is down like 5-6% off its high of day. But this is what happens when the volatility index is exceeding 30 and 40, really above 40. Assets are going to trade like S coins. It doesn't matter how big the market cap is. The bots are in trader mode. And any gap up like we saw today is an opportunity for bots to go short, to buy puts. Zero
yeah,
data expiration puts, bought tons of them bought this morning. And they're cashing in, right? And it's not even the selling pressure is not even, we're at the lows of the day pretty much right now.
yeah. Right
You're
now,
lower than you were yesterday at close. So going for another test of 15,392, an old high from, gosh dang it, my alert went off. Old all-time high from September 2021. Yeah, Nasdaq is now officially at its low of the day. S&P 500, same situation. Dow Jones is at lows of day. Russell 2000, not quite, almost though. So okay, we got a 2:35 p.m. Eastern time sell off, accelerating some right now as we're speaking.
yeah. There it goes. Just crunched. We just had a big crunch. And S&P. Look at this. We were looking at gold. This is 5 minutes ago. We had that big 1 bar push. It was a 60
VIX
point.
above 50. It's just my
Yeah.
alert just went off. Sorry.
This kind of stuff. I'm popping. There's a chart here. 30-second candle. S&P candle was plus. Low to high was 75 up to 130. I mean, it's a 55-point candle in 30 seconds, and then it's right back down. And that's where we are. I mean, that's the kind of market environment.
That
Um,
is bearish market price action for sure.
yeah. So really, recap, guys. Weekly stuff. The big levels: 48.73 on S&P, We're 50.80 at the moment. I started out talking about this today. 48.73. We don't want to see it back down there, but if we do, and if this thing continues to roll over, like we get a negative close today, which we very well could, 48.73 could be tomorrow. And if that's the case, and then this weekly bar becomes a bigger red candle, which it probably is, then we're not talking 48, we're not talking 49, we're talking 43.50. But the realm of possibility here is absolutely, it's either here or it's much lower. I mean, much lower. I guess what goes down tomorrow? What's just they jack all the tariff rates up? Is that the
Well, I mean,
deal?
that happened today to China. China, apparently, we have over 104% tariffs on Chinese goods or something now as of today. And I don't know. Every day is different, right? That's why this VIX is not probably going down because you have tariffs. I mean, blanket wide tariffs, and it's going to be like individual basis. Like, hey, Japanese prime minister's like he's got to come to DC. They got to talk about it. They got to, they got to come up with an agreement, for this new, global financial setup that's occurring. So it's not going to be like a 1 day thing or tomorrow it's all resolved. This is going to be a long time. So I just, and you look at Apple right now, probably the worst of the seven at this point. Tesla got wrecked, but since the crash, Apple's been the worst, and it's fallen below 100. It's right at a 176 support. That's the old major levels from 2022. I mean, losing that, there's a gap fill at 173 that's going to fill probably today, maybe if we go any lower. But man, you're looking at like this straight up crash, man.
Yeah, the
That's
Apple thing is that it's another one where there's nothing from 210 down to 130. You're 176, and again, you're just kind of begging to fall back to hit these patterns, retest the patterns, and all of this seems to be pointing back to 2022. I mean, just
yeah.
it's that's the big thing to be watching for this week is we break this. We can't hold. We got patterns. We got targets. We have no confirmation. And if they want to kind of keep doing this, then the bigger, like, I'm not saying it's going to happen, but if I'm trying to envision if it was going to crash, where's the obvious retrace range? And it is the last 2 or 3 years with S&P 500 leaving open this deep crab down here at 357. And there's just, again, where if it's not here, it's a lot lower. And that's,
It's funny that it's funny your T2 440 is an unfilled gap. If you look at the daily, I'm
yeah,
pretty sure like that's a big X marks the spot area. Let's see if I'm
that
goes
would be,
crazy and
yeah, that would be, if we would do a
yep,
full
440.
886 retest of the 2022 move, 431 that's off
Oh
of that
god.
pattern
That's
is
another there's three gaps. No, there's actually one, two, right, one gap, two gaps. There's four gaps down there, dude.
let me see.
From November
Go
2023. You see
go to the
that?
daily here.
All the way, yeah, all throughout November. Four gaps on the daily, on the spider.
Yeah, on the daily chart. Oh yeah, I see that. Try to take
Yeah,
all of
you got
them.
like a
Yeah,
418 unfilled gap. You got a
there 22 and then another one at 18. I see it. And
that's
yet
that's brutal, man.
and you have these just a lot of structures beckoning to be retested. You had some patterns from last August that were never T2'd, like NASDAQ was at 16.5 and they hit yesterday. It did this like looping thing. And when you see that, it kind of it brings other past history into relevance, and that's where we're at. I mean, it's been just a absolute meltdown 2 weeks against these patterns that took their time to roll over, but now they're there, and the possibilities are pretty small. But and I would say if not reaction, and or retrenchment, whatever you want to say. If we're not retracing target ones here, then it's much deeper to target two or all the way back down to go back retest this 3 year range. The last one we'll show is here is the diamonds Dow Jones index, which has it all. I mean, it's the same kind of a thing. Massive bearish pattern, weekly stuff, flushing down, not turning around, and you're back there. 37,300 is the big number, and you fail that literally this week. Like I would say it this way: if you're not going to close above these target one levels, and you find yourself Friday in this zone back here, then the run to target twos now, which is still across the board 10% lower, is what we're going to have to plan for, and that's just that means the rest of the stuff continues to implode. Um, I'll show you one more. I mean, amazing pattern dynamics, but Starbucks has this massive weekly structure, a couple of back-to-back patterns, but it really incredible stuff that went from shark to a bearish bat and did the one and then came for a looping type two back to 112. And now it's all the way back down for another one of these looping retests 73, 76. Remarkable. Retest the pattern. Like if you're looking for long-term support for Starbucks, you have to come to 73 or lower before its long-term history can resume. And that's and could be as low as 61. It kind of reminds me of like Dell and some of these that are coming back for the retest, and they're just collapsing into these zones.
Oh,
No,
it's so bad. Like, yeah, Starbucks is terrible because if you look at like the weekly, I guess you can look at the monthly too. You can just see the same like stuff, like the distribution evidence, where you had an all-time high in 2021, and then okay, well, 2022's bear market concluded. The buyers rallied this thing up like 78%, 115, and then another sell-off, and then a rally, and then so 116 is tested again in February of this year, and so that's like you're confirming now on very significant time scales that there is distribution less than before, and you're rolling over. You're below the 200-week simple moving average, like really bad. Um, this looks like, I mean, you give it enough time, man. $50, $50 maybe. You can then lower than that, maybe. Like it looks like you're done on stupidly significant. Like on the monthly, it looks so bad.
yeah, and that's
Yeah, $50, man.
yeah,
Probably. I mean, 64 to be nice, okay, but dude, the context is like you're gonna mark down tremendously. So I would never own Starbucks. Looking at the weekly and monthly on this thing,
and then like something like McDonald's here too is this going to give it up because this has been this was actually not too long ago all time highs. You're almost close there just a few days ago. Where do we see stuff in like McDonald's or I mean not really, which is amazing. I don't even know how people eat that food, but I'm really still looking. There's a daily crab, but it's more about like you go super long term here. Um, I'm just got to respect what's been going on. It's still strong there, but more things like Coca Cola or Starbucks or some of those other bigger names aren't producing what you want to see. Here's just one more. JP Morgan, just another one here where strongest bank in the world, monthly chart, where was the weekly? Weekly had where was the had a crab pattern here again where the targets are still lower. So that's again across the board all of these although they differ in terms of how low they potentially go. The
to revert to
break
the mean though, man, on J.P. Morgan Chase, you'd have to be coming down to like 115.
yeah, but that's the problem.
No one would even believe it. Yeah, right
Well,
now.
these are kind of unbelievable possibilities that are looking more believable if you don't hold here, right? I mean, literally right here. Um, yeah, Nasdaq now only down 40. We were down 100. I think I'm going to wrap it up here. I want to catch this last hour of trading. But I want to give you a shout out. Thanks, Mitch, for having the talk today. Everybody, get over to MitchRayTA over on YouTube and his associated channels. Check him out. He's on every night. That's where to, and he's kicking ass every night, man. So I know you got some things this afternoon too, but appreciate the time.
Yeah,
And
man. It's always a pleasure.
yeah, and let's see how we go. And if we have another meltdown, let's not hesitate to get back on.
Yeah, no doubt. No doubt, man. This is a lifetime situation. This won't happen again for the rest of our lives. What's going on, right? The US is going America first. And globalism is, not saying failing, but globalism is definitely topped out and is waning. So, yeah, it's going to be a big transition, and you're going to have a lot of volatility during that transition, a lot of unknowns, a lot of uncertainty. So, just I would uh I would just remain cautious, and cash is king kind of in situations like this. I know you can buy gold, whatever, you can day trade and all that, but like
I
it's
think
just not a great idea to be like, I mean, a lot of people like fresh, coming into the market in the past couple few years, and they're just like, what's going on? It's like, well, dude, we were dealing with a bunch of like fraudulent economic data. Like that's like public information, like job reports and everything. And now we're cutting like, all these government jobs, and government jobs were part of the fraud, and so you're just getting a self-imposed recession correction due to that. Um, so we're getting off a sugar high, and hopefully in the long term, I think it is going to be good for us, the United States, in the long term. Probably not good for the European Union in the long run. It's probably very bad for them. Very bad for a lot of countries that are not U.S. based. So yeah, and you know what happened before I go? United States dollar just hit an all-time high against the Chinese yuan. You type in USD paired against CNH, excuse me. You look at that chart, you can see it. All-time highs today, not yesterday, today.
wow, that's a big move.
Big breakout of like a massive kind of ascending triangle, situation on the weekly.
Remarkable.
That's a big move.
Yeah. What's that monthly chart look like? Oh, look at that.
It's gorgeous.
Massive recapture. Yeah, that's kind of like dollar yen too. Of dollar yen, even on a more conservative basis, but the monthly chart on dollar yen, um, just bigger targets here, and coming off of long term. I mean, a lot of
Okay, there's more data on yours. Okay, on a Wanda, there's no data. Okay, so it's not all time high. So multi-year highs, right? What is that? The highest level in what?
oh,
Oh,
in years,
yeah,
a
like
decade or more.
yeah.
So that dollar yen, that's that. I mean, look, that's if this is the adjustment phase, and it's more than just obviously it's more than just a regular correction, a regular. Hold on, USD CNH. What I was that where? Yeah,
What was it? CNH. Yeah.
CNH. Yeah. I think that's old data, but I hear it. Multi-year at least off of the low, off the 20 since the 2022 low. This continues, and that's strong. I mean, there's you can't stop that anytime soon. Really interesting. I mean, that the adjustment phase, that's what we're in. It continues, and again, we're going negative today. We were up 500, we were up 250 S&P, and now these are all given back. Not a good look, guys. Not a
Yep.
good look. We're in the middle of that.
Power hour 9 minutes.
Yeah, man. All right. Well, thank you so much, Mitch. Appreciate it. Everyone, give Mitch Ray a big shout out. Hit him up. Go hit over to his YouTube page there. Hit subscribe, like for him. He's on. He'll be on tonight. Are you going on this afternoon?
Yeah, yeah, most likely.
Yeah, probably. All right.
Oh, why not?
Do it. There you go.
Crazy
Hit Mitch
times.
Ray up there.
All right, Scott, man. Well, thank you for the invite, and we'll do it again real soon.
You got it. Take care, buddy.
All right, later, brother.
All righty. Bye bye. All right, everyone. That's it for today. Great show. Big shout out to and thanks to Mitch. Always his insights are on the money. And yeah, and so the takeaway is this: a bigger deal shaping up than anybody wants, guys. But that's where we are. I mean, we just have to suck it up that it's just not. It has been this continual question of letting this retracement happen that fell apart. I mean, again, I take you back to the cues here of what we have been framing out the whole, really since January, of a retest of 487 from 537 to 487. We're now 422. This was expected. This second part, not so much. And now I just want to figure out, okay, what are the bottom possibilities? And what is it? Where can the cues, NASDAQ, SPY, turn around? We're here on the daily. We're hitting it now. But you need to see some absolute inflection holding there, because under these lows, under yesterday's lows, I think for the cues, it's not even 420 or 400. It's like 350. And the one thing that we've done correctly and identified, I think, in time was just the whole bumping up of levels on the weekly, which are much lower. They're a lot lower. And we're going to find out, is this going to happen now, like April, that we just get the full-on meltdown? April into May, or this stretches out all the way through the summer, making this a rather unpleasant, at least on the long side, an unpleasant 2025, because we don't have it yet. We hit levels, but stuff like this continues to persist, that with that deep oversold, we just continue to accelerate lower. And I amazingly, since mid-February, I would say every week, and that's 8 weeks in a row, down. Rule of thumb is usually 7 or 8 bars down. That's usually it for any time frame. And you look for something, but that's not ready yet. So let's see. Let's see if there's anything. Is there anything here right at the moment? I mean, we came in looking at some 5-minute RTHs. Okay, we have the Qs. There you go. 5-minute right now. Those were the bearish patterns. We were talking about those when we started. Now you have a bullish deep crab. I would say this. You're right there at 422. You fail 422, guys, this thing's going to collapse. I mean, today, tomorrow. And you got the news tomorrow, so a lot of motivation to really expect something dramatic. I guess the VIX is definitely, that's going to hang over everyone's head until that can roll over. So VIX right now, where are we? We're at 50. We're at 50 level. We were at 38 when we, this morning. Now 50. We're going to have to wait for that. Keep an eye on that. Keep an eye on crude oil tanking from 60 straight to 50. VIX to 60 or higher. Gold finally giving something up. And then the rest of this, into tomorrow could be a real issue. I mean, a lot lower, where your minimum target 1 levels get retested. That's even right now, guys. Let's just line it up for NASDAQ. That's 48. NASDAQ is the weekly levels here is 17,800, 838. That's failed. And I would think more like 2,000 lower to 15,821. You're not stopping yet on that. Or S&P, ES right now, the futures, all those weekly levels like 48.70 and stuff, 47.66 is probably what we're targeting. What was the wasn't there a butterfly up here? Crab, 48.73. You're 50.72 at the moment. Don't be surprised to see that thing come back down 48.73. And I mean like tomorrow into Thursday. And then the final one, Dow Jones. Okay, Dow Jones, 37K. We're 38K right now, 37. Maybe come back, retest that tomorrow as a possible retracement low. And again, there's your action just the last 2-3 days, 2-3 sessions. Big gap up, no follow through. Now we're going to fill the gap. And what are we doing? The zero oversold readings here. Guys, we got a lot of work to do. Again, I'm not offering up any long positions. I just really want to see, is this going to do the big move flush down? And, you know, maybe then after other things happen, like I'll look for long opportunities after VIX hits 60 to 80 retest. Or if crude oil collapses under 50, then I know we're close. But this is liquidation all over it, and that's in terms of what we've done and the amount of years that I've been doing a podcast. This might be the second time, and COVID-22 is pretty much the analogous scenario. But I think this has got more to it. I mean, there's COVID, there's 2022. No, sorry, there's 2020. Like that. COVID 2020 from high to low. 29 down to 19, 18, 30+%. We do that. We do a COVID washout type of move. All right, then you're talking 33, 34. I want to get you guys used to these numbers. Kind of tough to swallow it, but I'm thinking more like target twos have to be considered as a maximum downside, especially if we continue to do the garbage like we've done now. Nasdaq's down 112 now, 115. S&P's off 25. I'm going to catch the last hour of the session. All right, guys, I've been on for a while. Great show with Mitch. We'll be back on Thursday. You guys like what's going on here, hit subscribe, hit the like button on the way out. I appreciate all of you. I'll give away some more software on Thursday. I'm going to get back to work on this last hour and see what I can make of it. Okay, and I'll have some ideas for Thursday. Maybe some shorter term stuff. Been a challenging 2 weeks. I get it. But I think we're pretty clear on what we need to be looking for going ahead. And it ain't pretty. All right. Thanks, guys. I will see you back here on Thursday, 12:30-ish. If you have any questions, get me on the Discord. Until then, as always, go get them.